Hey guys, it's Matt. Today we're going to talk about entity structure. And before you turn this video off and go watching something else because you want to find something that's way more exciting, I promise you, entity structure has allowed us to do really big projects and to grow our business exponentially. We're about to close on a 49-unit apartment building next week, and I attribute that purchase to the way that we're structured as a company. So pay attention, because I'll show you how we were originally structured as a small company and structured ourselves as a medium-sized real estate company. It's allowed us to grow exponentially. We've probably tripled our portfolio in the last couple of years by just changing up the way that we're set up as a business. So let's get into it. Let me show you how we were laid out and how you can lay yourself out in the future. So the way that we were in the past is just as own a property personally or as an LLC. Okay. And this is your entity here. So this entity may own the real estate directly. You've got the house that's sitting here, or the apartment building, or whatever it is. When we first got started, we actually owned stuff personally, believe it or not. And our own personal name owned the property. That was our very first investment, believe it or not. I know some of you folks out there that set up that way too. As you know, you want to be an LLC. So the way this was originally how we were structured. When we did deals, we would buy another property in this entity, another property. And I'm also not a fan of owning an LLC per property if you have the same ownership or anything like that. But just this is a bit cumbersome, and it's kind of hard to expand, and it's also impossible to bring in investors into something like this. You can bring in private money, but it's very hard to bring in people that want to own a % equity for something like this. Additionally, you can set off as a budget line item for marketing or for branding or for other types of initiatives under this LLC, but it's hard to have the revenue stream present there for growing this entity. So this, I think, can only get so big. It's my 2 cents. You'll see what I'm talking about on the other model. This is what we grew into. So we have this company, which for us is called the DeRosa Group. And the DeRosa Group is a property management company for the assets that we own directly. It also manages assets for other people, which we'll get into why that's important to have. And this is an LLC that's set up as an S corporation. Okay, and an S corporation is something you can read other articles in Bigger Pockets on why that's important, but it's something that we generate revenue through the DeRosa Group, not through rental income, but through business ownership income, which are things such as we've got underneath the DeRosa Group, I've got all these separate companies that own the real estate. And the DeRosa Group manages those properties. So if you guys are out there that are landlords, my high recommendation, unless you're just completely passive and not managing anything yourself and you're just a passive investor, maybe you can be in this structure. But if you want to do this thing full-time as a business, you need to consider owning some entity that has ownership in another entity here. These are all LLCs. And we've grown into LPs, limited partnerships, because a limited partnership is a better structure for passive investors that want to get into your business because they're limited partners. Again, whole nother conversation on why limited partnerships are important. But those can be sub-companies of this, owned by different people, and Susie can come in and own a part of this with me, and then Paul can come in and own a part of this with me as well. It's just, it's set up that I can delineate and I can go as many legs of this as I'd like to go. The DeRosa Group also, as I said, is for the 100 or so assets we have here around Trenton, New Jersey. We manage those assets. So there's a revenue stream that comes back to the DeRosa Group. Now, this is how versus this is a more important model to have. The DeRosa Group then has a revenue stream. Now, most of this revenue gets put right back into the business to keep it going, but it can have payroll. It can have people that work for that company. We have an office manager, property manager, a maintenance staff that all work for the DeRosa Group that maintain our properties, and I can now drive this culture myself because I have a revenue stream to do it, right? It also can have a marketing budget that goes out and develops a website and develops marketing and does brochures and things like that, designed to show more people what you're up to as a company. So we've been able to develop a brand and brand awareness that's allowed us to get more people comfortable to know who we are and even aware that we're even out there in the marketplace, so that when we launch a new project like this 49-unit apartment building we're doing, they can become aware of that project through our branding and through other ownership things that they have with us. Maybe they own a piece of this other apartment building or these couple of single-family homes over here. Maybe they've done a private loan deal or something like that, and they come in to this larger deal that we've done. Okay, so it's because of this branding. It's because this company has revenue on its own that it's allowed to help me build this as big as I'd like to go. Now, for those of you that are landlords and are also doing fix and flips, there's a big benefit to having a functioning S corp that has payroll. Here, now I know I'm getting a little bit like level 2 here to talk about payroll and stuff like that, but it is something you have to think about if you want to grow your business. That if I do a flip out here, that flip can run through this S corp that has payroll, and here's me, here's Matt all the way over here. As a matter of fact, with a smile on my face. And so I do this flip, and I'm on payroll with the company. I make a salary for myself, very, very meager salary, but also as the owner of the company, I also have business income, which is separate. So that's the great things you can get into with an S corporation and doing flips and also having property management revenue and being able to scale out the rentals and having revenue there that I can do marketing and branding and everything. I know this is a little complex, guys. It doesn't have to be this complex at first. You can, of course, take a lot of these circles and arrows out of here and have a centralized LLC that is a company that just doesn't own much, if anything at all. It does your marketing and your branding, and you funnel some of your cash flow revenue, if you just got a few rentals, into this company. And this is really the face of your business. This is how you put yourself out there. And as you grow, you can start funneling more and more of your revenue into that company and use it as a management company, either an asset management company, property management, however you want to be set up. And that company is the face of your business, and you can use that stream to push and make people more and more aware of what you're doing. And once you start developing a payroll or W-2 for yourself, then you can start using it as an S corp and flowing a lot of your revenue through there. So that's it. Again, ask questions. Let's get into some good conversations. I know, again, little higher level conversation today, but it's a good conversation to be in, and it's how you can grow and scale up very, very quickly for your business. So I'd love to hear from you guys. Love to hear from you folks out there that are utilizing S corps or that are managing your own assets through a property management company with employees, or those of you folks that were inspired by this, or maybe even the folks who want to disagree with me and think that this is a better model. I'm happy to go and have that conversation too. So leave a comment. Thank you so much for watching, and have a profitable week, guys. Take care.